I'm really more interested in silver as a 2026 play. I mean, silver's already up a significant amount this year, and it can still catch fire and generate its own momentum to the upside, which is typically what it does. It'll sit there and do nothing. And people are like, well, I don't want any of that. It does nothing. And then it starts to break out, and people think they get FOMO, and then they go, I got to get into this. And then, the thing kind of becomes like a virtuous cycle, kind of builds on itself. It generates momentum, the price goes up, which generates more momentum, and the price goes up further. That kind of started to happen back in the springtime when we went from 27 to 33 to 39. But I think the day is coming. I think it's more like a next year phenomenon. If I'm right about what Trump has planned for 2026, then silver's going to go back to its old all-time highs.
Silver's up 35% in just 1 year. 3 weeks ago, it nearly hit $40 an ounce. And if Craig Hemke's right, that could be just the beginning. He's looking ahead to 2026, when a perfect storm of supply deficits, market sentiment, and dollar weakness could send prices surging past old highs. Currently, silver trades near $38.20, up approximately 0.7% on the day as it presses against a descending trend line that has been in place since the multi-year peak in July. Just a few months ago, we saw what happens when the market wakes up, a leap from $27 to $39 in short order. Hemke says if silver breaks those old heights and climbs into the $50, the rush could be massive, fueled by FOMO and fast-moving breakout traders. But here's the bigger story. Silver's been in a supply deficit for 7 straight years. In the last 4 alone, the shortfall has totaled between 700 and 800 million ounces. That has put constant strain on the available physical metal. Add in the fact that silver's pricing is highly leveraged, raising doubts about how much real metal backs the market, and you start to see why this setup is so explosive. Hemke points to moves in platinum and copper as reminders of how quickly sentiment can turn in metals. When the mood shifts, silver could rip higher in a matter of weeks, not years. Gold's also catching a bid, edging higher after the latest U.S. inflation data reinforced expectations for Federal Reserve rate cuts. The dollar slipped, making bullion cheaper for overseas buyers. In the short term, Hemke says the dollar index still matters because high-frequency trading algorithms react instantly to its moves, often pushing gold in the opposite direction. However, over the long haul, the bigger force is the system's reliance on generating more revenue to service debt. That constant expansion erodes the currency's value, and in that environment, gold prices keep climbing. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
I've been buying physical metal since, I don't know, 2009. I kept buying silver. I mean, I've got some silver I bought 7, 8, 9 years ago, like at 13 and 14 and 15. So my cost base is pretty low, but I haven't sold any of it. I think I'm about 60, I don't know, just I bought 60% gold, 40% silver. I've always been more of a protect your wealth with gold than speculate with silver. It's true though that silver usually moves, later than gold and usually moves on maybe a 2x percentage of gold. The fundamental physical dynamics are fantastic after what, 700, 800 million ounce supply deficit over the last 4 years, right? The scheme of how it's priced globally with derivatives that rely on leverage and is the metal, how much metal actually backs all of these forward and futures contracts around the world. We're seeing really interesting developments in other markets like that, like platinum, that could very easily ripple over and impact silver. Copper, it's kind of tied to copper in a way. Copper's had obviously its own party for the last 5 weeks. But anyway, I'm excited to see what will happen with silver. I don't want to make it sound like next year, but I'm really more interested in silver as a 2026 play. I mean, silver's already up a significant amount this year, and it can still catch fire and generate its own momentum to the upside, which is typically what it does. It'll sit there and do nothing. And people are like, well, I don't want any of that. It does nothing. And then it starts to break out, and people think they get FOMO, and then they go, I got to get into this. And then, the thing kind of becomes like a virtuous cycle, kind of builds on itself. It generates momentum, the price goes up, which generates more momentum, and the price goes up further. That kind of started to happen back in the springtime when we went from, 27 to 33 to 39. But I think the day is coming. Again, I think it's more like a next year phenomenon. If I'm right about what Trump has planned for 2026, um, then silver is going to go back to its old all-time highs. And people are going to be like, whoa, it's going to, roll over for sure. And then when it gets above its old all-time highs, and starts trading with a five handle, people will be like, "Oh boy, this is," and then you get this rush. And so, again, I'm positioned. I have a lot of physical silver. I've never sold a single ounce. I don't go to like the coin shop and take a couple of tubes of Eagles, and because then what do? You turn it back into cash. Well, who wants that? But I do think silver's got a lot of catching up to do, and it's going to continue to do it. It's almost as if the dollar index was created for the sole purpose of creating this mirage of stability, right? There's a period when the dollar looks weak versus the other currencies that are in the basket. That's primarily the euro, but also the pound, and the yen, and you can go down the list. And so the dollar index goes down, and then there's a period where the dollar's stronger versus all those others, and the dollar goes up. And you can pull up a monthly chart of the dollar index and see that it's basically the same point it was 30 years ago or 20 years ago. Pick your time frame. I mean, it's around 100, and that's kind of like the place it seems to oscillate around. So is the dollar stable? Well, relative to these other, trashy fiats, but is it really stable? So I like to put it in gold terms, as you might imagine, as a precious metals person. I've got here, I always like to do this, Ladislav. I haven't done this with you yet. This little gold bar. Now, this is not a gold bar, okay, right? It's got a hole in it. It's a piggy bank, right? But that's gold in its most recognizable international form, that allegedly the 400-ounce bar, okay? You could go back to 1971 when Nixon suspended, the gold backing of the dollar, and it took about $14,000 to buy a bar like this. Fast forward 25 years, it takes about $110,000 to buy a bar like this. Fast forward another 25 years, it's now like $1.2 million to buy. Has this changed, Vladislav? I mean, it's the same. I mean, the gold remains the same. So from my perspective, that's the best measurement. Even in the last couple of years, you used to be able to buy that for $2,000. Now it takes $3,400. So the dollar continues to weaken, not so much against the other fiat. That's the deception. Continues to weaken in what it can purchase. Gold is the standard by that. So that's one part of the answer. The second part is, though, and it's very important, though, to track the dollar index, because with 80 to 90% of trading volume every day being driven by high frequency trading computers, algorithmic program computers, they make buy or sell decisions a lot of times based upon whether the dollar index is going up or down at any certain moment. And you can see it anytime news breaks, during a Fed press conference or after some data point, dollar spikes and gold plunges, or dollar plunges and gold spikes. So you need to know that general trend of the dollar, because it'll either provide a headwind or a tailwind for the precious metals if you're trading. But over time, there's really no other way to keep the system going than by continuing to print dollars to service the debt that devalues and cheapens the existing dollars, and gold just keeps going higher.
Gold could be heading straight for $3,800, and history says the next 2 months might be the perfect setup. August and September are gold's strongest of the year, and Craig Hemke thinks this run might already be in motion. Let's break this down. Over the past decades, August has been up 61% of the time with an average gain of 0.84%. September has been positive 54% of the time with a bigger average increase of 1.25%. That's already a bullish bias. But when the dynamic monthly cycle is rising during these months, you can tack on another 10 to 15% to the probabilities. Currently, that cycle is trending higher. The next seasonal peak is expected to arrive in mid-October, and Hemke notes that the real catalyst could be upcoming Federal Reserve events. Unless we see a severe deflationary crash, he doesn't expect gold to fall below $2,800 to $3,000. In other words, dips are for buying. Technically, gold had formed a triangle pattern but broke down from it in late July. That would usually raise caution, but the seasonal strength in August and September flips the picture. Momentum is strong, and that points to higher prices through the 15th and possibly to $3,800. Let's get back to the interview.
Gold has averaged a gain of about 9.5, 10% since the year 2000. There have been a handful of years where the gain was over 25%. I think 2024 was the third year. So we entered this year, and I wrote that in this macrocast. It's like, okay, we should probably, I mean, I think we should be happy going back to a 10% year, right? Now that's what history would suggest. It's about how quickly the dollar's been devalued over time. And so you think, okay, that would make sense. And here we're, boom, just blast out of the gate as the dollar index is falling for the first 6 months of the year. And now we're up 25% again already. I mean, we were going sideways for the last 3 months. And I mean, frankly, Vladislav, we could go sideways the rest of the year and sit back and go, yes, what a great year, right? We get anything back now, and people are just despondent, and depressed. And, every time gold goes down $50 or $100. So to answer your question, we've been going sideways for about 100 days. Price appears to be pressing up against a very well-defined resistance level. On the front month December futures, it's about 3,500 or so. It's been up there 5 times now and has been immediately reversed the next day. So if it can get through there, and we're in a very strong seasonal period, August and September, typically very good periods for gold. We're in a time now where Powell's Jackson Hole speech later this month and the September FOMC ought to be pretty dovish, given the recent data. I think chances are high it could break out. And if it does, we're open field running again. I think dip should be bought. Outside of a complete deflationary collapse where all markets are plunging and gold futures are being liquidated just because they have a bid, it's hard to see where we're going back under 3,000 or 2,800 or something like that. And boy, if we do, people better be excited and happy and buying it up rather than being angry. And one last thing, that the consistent central bank demand is also what underpins this. And that, even though it's slowed a little bit this year, certainly doesn't seem like it's reversing. There's really still a kind of disbelief, I think, from the general investor that gold price is where it is. I think they misunderstand why it is where it is, and they think, well, it has to go back down. And so what happens is you get 2 weeks ago, great earnings, as you mentioned, for Newmont and Agnico and, a slew of others. And then the stocks go down on the earnings. And you're like, well, what's going on here? And I think that's pretty clear. I think that the people that, were trading something like Agnico Eagle saw those great earnings, saw the price pop up, and then they sit back and they go, well, what else could this company do for the next 90 days? Why would I want to hold this now? I got a profit. I might as well sell it. And then maybe we'll look at it again, sometime in October, or September before third quarter earnings, because maybe the gold price will go down during the third quarter. And in the dollar, late in July, the dollar was rallying, and everybody, we just had an FOMC where Powell's super hawkish. And so you saw that right up until the 1st of August, that the miners reported these great numbers, then they were going down. Well, then what happened? The jobs report was finally understood to be a joke. And, oh, wait a second. They're going to be cutting a lot this fall because these jobs are terrible and the recession that we talked about and everything else. And so last week, it was as if all the people that had sold or waited to buy, and they thought, let's see see if gold can hang in there in the third quarter, all of a sudden went, whoa, gold is going to hang in there in the third quarter. In fact, it might even go higher. And so we better get into these shares. And the GDX was up 11%, the SIL was up 15%. Everybody kind of rushed in at once. And so as the gold price, I guess I'm giving you a long answer, Vladislav. It must be the coffee. As the gold price maintains, okay, it just stays at these levels. As you said, the miners that are controlling their costs and keeping their margins wide are going to continue to do well. What we need is just a recognition. We need general investors. We need people to be focused maybe more on value, than the growth of the Mag 7. Um, and that kind of that'll open more flow of funds into our sector. But for now, yeah, you're right. They look great. And the smart companies, the ones with excellent management, are doing the best. I have been expecting the US to slide into recession. This is the third year in a row. So let's kind of frame what I say next based off of that. It didn't seem, it kind of looked like it was starting to happen for a couple quarters last year, and then that kind of turned around. Um, I write, this is a long answer, I apologize, but I write for my own benefit an annual forecast, usually write it between Christmas and New Year's because that's kind of a quiet time. And I write an annual forecast when I say for my own benefit because I want to know by the end of the year what I was thinking as the year began, so that when I inevitably get a whole bunch of stuff wrong, I can go back and learn from it, right? So this year's, I call it a macro cast, is actually it's pinned right at the top of my Twitter page, so anybody can read it. I called it the inversion reversion, and the reason I called it that is because history, the last 6 or 7 times that the yield curve has inverted, when it then uninverts and you get a positive slope again, that's typically when your recession has begun. Well, we started to uninvert very late in 2024. So I thought, well, this is, unless we're in a whole new, different time of cycle and model, then we're heading into a recession now, and you're going to feel it in 2025. So I've kind of thought that way all year. Fought my way through all sorts of what we now know as bogus data. And as we now get deeper into the summer, it appears that recession has begun or is already, or is just getting started. But it certainly seems like we're there. So when it comes to valuations, this is all something that I'm just an old person. That's a hard thing for me to get my arms around. But I've thought the market was going to roll over on multiple occasions, and it hasn't. I know there are a lot of people I respect that are really smart that think we're in kind of a rolling double top in the S&P. And maybe we are. Maybe we're going to enter into a pullback. But I also think, Vladislav, that we are in that kind of crack up boom phase of the erosion of the currency and the debt-based monetary system. And in that case, things just keep going up because so much cash has to be printed to service the debt that it can't help but kind of get out into the regular markets and just look for a home. So every time I thought we were going to roll over, magically the stock market has bounced back. And I suspect that rather than some protracted 50% decline, any sell-offs will continue to be relatively shallow.
Wealthy investors in Asia are quietly loading up on gold, and the numbers are staggering. In Hong Kong, allocations have more than doubled in just 1 year. A 2025 HSBC survey of over 10,000 affluent investors in 12 markets found that Hong Kong's wealthy now hold a significantly larger portion of their portfolios in gold. On the mainland, the change is just as dramatic. Gold jumped to 15% of portfolios from only 7% a year ago. And the timing makes sense. The US dollar is wobbling under the pressure of a ballooning debt deficit and the real possibility of Federal Reserve rate cuts. That's precisely the kind of environment where non-yielding gold shines as a haven. Additionally, a weaker dollar makes gold more affordable for buyers in most currencies, further fueling demand. Major banks are taking notice. Deutsche Bank predicts bullion will average $3,700 an ounce in 2026. Goldman Sachs is even more bullish, calling for a rally to $4,000, well above the roughly $3,375 level on August 11th. Momentum in both gold and silver is being fed by a rare convergence of seasonal strength, persistent supply imbalances, and a global shift in investor behavior. From Asia's growing appetite for bullion to the persistent strain on physical silver stocks, the forces at work suggest these markets could be on the verge of price levels unseen in decades. If debt pressures and currency weakness continue to build, the next breakout may arrive faster and run farther, than most traders expect. How might the combination of dwindling physical supply and shifting global capital flows reshape the precious metals market over the next 2 years? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.